Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining with us. We're also streaming to you live on yorbamedia.com. And my guest this segment, we've got him for two segments, a rare occasion. Nick Santiago, President and CEO of In the Money Stocks. This is a guy that's hit it out of the park more than just about anybody else that's been on the show. We've got some pretty good people here. Once I saw this guy hit the trade and he missed it by 1/100th of a cent on a copper trade. It just blew my mind. Nick, thanks for coming on the show.
Great to be back, Michael. Thank you for the nice compliments.
Okay, you're welcome. FXY, you want to start off with this currency trade, right?
Yeah, I just wanted to give your listeners, because a couple weeks ago I had talked about it for traders on that FXY. If they wanted to short it, another way of playing it was with the YCS. But if anybody shorted it from that day, traders should now cover that trade. Last week I gave a target on here to, I think it was 123.50, and we went down all the way down to 122.40 yesterday. So just basically cover that trade, or at least tighten that stop up really nicely, and if you want to try to ride it down a little bit more. But we've kind of milked this one for all it was worth, I think, and just want to give your listeners the opportunity, to just follow along with us.
Okay, so are you thinking that I'm looking at the daily on this, just huge, 129 to 122. Oh, that's a great trade. Do you see a bounce to a certain resistance level to short it again?
Not yet. We got to just, at this point, it's always possible to trade back up to the 125, 126 area. But right now, I wouldn't do anything with it. Just take the money.
No, that's good. I wanted to get that cleared, so nobody says, "Oh, okay, I'm out and I'm going to short it again." It could continue. It
can continue downside. That's why, like I said, just trail that stop tightly. It's always possible that it could go lower, but we hit the second objective, and once that happens, normally, we have to get a bounce now, and I would just sit back on the sidelines. If I see it again, I will be back on the show and always alert your listeners as well.
Okay. All right. Now, let everybody know, because there's probably some new people that showed up since you were on the show last time, that what it is that you do, that how people can actually make money just by going to your trading room. How does that work?
Well, you come over to our trading room, you'll get to see our desktops. You'll see everything that we're doing. You'll get to learn a lot about the chart patterns that we're doing, that we're looking at, how the market mechanics work, what kind of setups, the psychology in the market. Actually, all the charts are just basically footprints of money patterns, where the money is flowing, either up or down. So if traders come over to that, you'll get to see us in live time. You'll also be able to interact and ask us as many questions as you like. Whether it's swing trading, day trading, investing, longer term, makes no difference. We use the same methodology. And in fact, this weekend, Michael, we're having a In the Money Stocks methodology webinar, which is about a 7-8 hour event. It's a boot camp, and we're going to talk about all of our techniques. Also, we're going to cover all of our cycles and all our proprietary methods.
Oh, you're going to actually open that up?
Well, yeah, we open them up to traders that come over to the In the Money Stocks methodology webinar that is scheduled for this Saturday at 1 o'clock. And it's a great event. Seats are filling up fast, and if anybody's interested, there's still some seats available. It usually fills up by Friday morning. Okay,
so inthemoneystocks.com, certain place on the website they need to click or anything?
Yeah, just come on over, and you could just click under Education and Online Courses, and you'll see it right there. And you have any questions, just send us a quick email, and somebody will get right back to you, or you could sign up right there for the webinar as well.
Okay, all right. Since we're talking about currencies, look, I went long the euro a couple of days ago. I had been short previously, but I reversed. Went long in the euro U.S. on the FX side.
Yep.
I'm long at 132.41. And my stuff tells me this thing could go off for a little while, at least another couple of weeks. But I wanted to get your expert opinion on what you think is going to happen next with the direction of the U.S. dollar.
Okay. Well, if you don't mind, I'd like to just give you a little something on the euro as well.
Okay, let's start there then.
Okay, because I do have a resistance point coming up on the euro, and it's at let me give you the exact number. It's at 133.9. So watch that level. There could be a chance of a pullback right there around 133.9. $1.33.9. So I think there's a good chance that we do see a little bit of a pullback. Euro's having a great day. In fact, I wrote an article this morning on my blog about the euro today, and I talked about it getting up to this level, and we're now almost there. We may hit that by tomorrow morning. So pretty good move. I don't disagree that it can't go higher. There's always a chance. You're going to come up to a big 50% retrace on the euro at 134.4, and then you're going to come up to a bigger level, which would be as 0.618 at 136.3. But mathematically, I do have this level coming up, and maybe you could watch it. Maybe your listeners could watch it. It would be right around the 133.8 level for the euro.
Okay, I got that. Now, we'll cross that bridge when we get to it, whether I should add more or just take profit, depending on how it looks. But at this point, going on the flip side, say the U.S. dollar, because a lot of people have to deal with this, whether it's a company, and do I take my money in euros, do I take my money in dollar, what have you.
Yeah.
Do you see the resumption of the downtrend in the dollar on a longer-term basis as it sits now?
Well, I think the dollar is maybe it's getting sold off today pretty sharply. I mean, it's getting hit hard. The U.S. dollar index, that is. So I think the dollar could trade a little bit lower. I wouldn't rule it out to go test that 78 level now. It is going to have some support around 78.50, which was a pivot, I guess, from a couple of weeks ago.
Feb 9.
Yeah, right around the 9th of February. I mean, there's always a chance that we'll get down to around 78. However, I do think the dollar is going to make a pretty big reversal to the upside. And then in the latter part of the year, I expect the dollar to get completely annihilated.
Okay, all right. Now, that is valuable information. So are you thinking possibly some support there around that Feb 9 area, 78?
Yeah, you should have a little bit of support there. I'm not sure how long it's going to hold, depending on what type of bounce we make there. But right now, even in the S&P 500, this rally is long in the tooth, and I've been very, very patient on the short side, as you know.
Let's go there, the S&P. Tell me about it.
When the dollar goes down, the S&P 500 goes up. That's basically the gist of it. You could even take a look at a U.S. dollar index chart today and see how it's declining, and the markets are now rallying. So basically, when the dollar makes a pretty substantial reversal to the upside, these markets are going to come in sharply. I've already sent out an alert to my listeners that on all long side trades, you want to tighten the buckle by Tuesday. By Tuesday next week, you really want to start to trail your stops tightly. This market is overcooked. Oil is overcooked. Everything is a little bit overdone here. It's been a great rally, but I think it's going to be the sucker rally of 2012. And in the latter part of the year, we're going to get the real rally.
Okay. Before we get to the latter part of the year, what's so special about Tuesday?
Well, Tuesday, it's a couple of anniversaries that I've seen in the past. Also, if you notice, last year the market sold off basically around that late February time frame. And if you go back and you look, just say you go back to 2007, you're going to notice that at the end of February, we had the first real stock market crash in 2007 before final market top. You want to watch those anniversary dates, and I've already told my subscribers by Tuesday, Wednesday of next week, which is the end of the month. Already they're in conservative mode, and you got to be careful around those anniversary dates.
Okay. Now, one of the other markets that you've done exceptionally well calling on is the copper market. Do you mind if we go there for a minute?
No, not at all.
Okay. Well, tell me about that market. How do you feel it's playing?
Well, I think copper has held up extremely well, but it's held up because of the U.S. dollar index. Now, today, the dollar is falling, and copper, is not doing so well. So I still believe that that's the area that traders want to focus on to short. I'm still holding a BOM trade, which is double short base metals. I've been in that trade since $10.56, and I still continue to hold it today. I believe copper is still in somewhat of a bear market, even though it's had a very, very nice bounce. But I do think it could be setting up as a nice short.
Give me that symbol again real quick.
The ticker symbol is FCX.
Okay. I'm going to put it in. Go ahead.
Yep. The ticker symbol is FCX. You had a nice little reversal day, I think, on the 16th. And now it's just trading up a little bit. But see that pattern up there around the 9th of February? That was a bullish pattern, and it failed. The best moves sometimes come from failed moves. So I'm ultimately expecting Freeport Mac to test $40 and then actually trade back down to those October lows in the latter part of this year.
Okay, which is somewhere around, what is that, a little below 30 maybe?
Yeah, a little below $30, around $28.
From 43 to $28, that's a pretty good trade. All right, we need to go to a break. On the other side, let's come back and talk about the energies, interest rates, and anything else that you've got in mind, okay?
Sure.
All right, we'll be right back with Nick Santiago on the other side of these breaks. Don't miss this segment. It's got valuable information for you. We'll be right back. Welcome back to the Traders Network. It's Michael Yorba, your host. Also streaming to you live on yorbamedia.com. My guest this segment is Nick Santiago, President and CEO of InTheMoneyStocks.com. Nick, thanks for coming back on the show.
Always great to be here.
Okay. All right. Did you want to go into the energy sector? Or did you want to start with somewhere else?
Yeah, let's start with oil. Before I was with you today, I was working out some oil calculations, and I'm looking at this 113.50 level for spot crude on West Texas. So I do think that that's going to be a really, really big spot to get through. Maybe it overshoots by 50 cents or so, but right around 113.50, I think is going to be a major, major resistance level. And I'm going to actually post that number to my subscribers a little later today once we're done with this call. But so I think traders got to focus on that number if we get up there as being a very, very important resistance level, despite the geopolitical events that are going on with Iran and everything else, and the weaker dollar. That usually will make the perfect elixir for higher oil prices. But 113.50 is definitely going to be a real big level to get through.
Now, here's the $64 trillion question. Do you think we will pull back and then rally through that because of what's going on?
Well, that's always a possibility. If we see pattern change around that area, and if you get up to that area and then you get a significant pullback, I mean, obviously you always got to watch for pattern because markets could trade higher. Right now, crude is broken out to the upside, and it can be an animal when it goes.
Yeah, I mean, I've seen some huge moves in this thing. So the destruction that the higher cost of transportation via crude oil, then all the distillates down, the trickle down from that is going to be pervasive all over the globe.
Absolutely.
Is that part of your analysis of maybe finding a top here short term in the stock market?
It's probably going to be a catalyst. Remember, I guess a few months ago when we talked about this, I was talking about the markets moving higher from Thanksgiving going into the end of January. Even back then, I said, well, it will probably be high oil prices that will hurt the economy and the stock market, and we're getting there. It's going to happen. I mean, at least I feel very confident that it will. This is unsustainable. The stock market's moving up. You have a $4 gasoline at the pump, still a high unemployment rate. All of these things just can't mix for too long. But markets can stay irrational and euphoric for a while, and then eventually something has to give, and we're almost there now.
Okay. All right. Now, but what about this natural gas? I've got a guy that's at part of the social network, and Scotty. He came on here a while ago, and the guy's good. I mean, he called to the day the low on the natural gas price, and you're an exceptional trader. You've already proved your mettle here over and over and over again. I wanted to see if you could give me your analysis, your take on this natural gas.
Well, We also were traders on the natural gas at the lows. In fact, I think we did it we brought it up on your show, where if you go back to the weekly chart, we went down to the 2009 lows on natural gas, and we took out that level and then rebounded right through there. So, right now, as long as we don't go back down there and touch the lows that were made in January on natural gas, I mean, there's a chance it can trade higher. But to be honest. I'm going to say $3 is really the natural gas resistance point right now.
Okay, so we could just be a range-bound accumulation phase for the commercials. It could go on for a while.
Sure, it can go on for a while, and then once we see a more prevalent pattern on the chart, then I could say all right, natural gas is really set to take off. I mean, at some point you have to think that this is going to, be a good trade. Just look at companies like ExxonMobil. They bought out XTO Energy. These guys are very savvy. They're not buying XTO Energy because natural gas is going to be trading at $1. These guys are bought out XTO Energy because they believe that natural gas has a real valuable future. So just think about that for a minute. And I know not has nothing to do with technical charts, but we're making some higher lows in natural gas, and that's a little bit bullish.
Okay. All right. Now, you also wanted to talk about the metals today. The gold, I mean, primarily.
Yeah, I want to talk about gold because gold made a really, really nice move yesterday, and it has the possibility of making a move up to the 177 level. I think around that area, should it get there, and I'm not bullish on gold right now. I will be in the latter part of this year, in the fourth quarter. I will be, a gold bug once again. But, right now, gold has a chance to get up to 177. I really just don't see much more upside than that. And if you're looking at
you mean
gold futures,
GLD?
GLD, yes,
right.
Yes. If you're looking at gold futures, then it's going to be probably around the 1810 level.
Okay. And are you calling that, that's pretty much it for the rally, or are you thinking that there is an underlying reason for a trend to continue here, the resumption of the bull trend?
Well, I don't think the bull trend is really, the bigger bull trend is going to end, but I do think that's going to be the extent of the rally from the end of December 2011. So, in fact, I think I was on your show that day, and I said, looks like gold is putting in a short-term bottom, and we talked about that on the 29th of December, and we've been rallying ever since. But that will be the end of this rally. Okay.
Now, I know we're technicians, you and I, but there are fundamental reasons. I've had some people come on the show and they say that, as a matter of fact, guy yesterday, Tony, was saying he thought we were going to top out on the gold market, maybe even a 20% drop, but his reasoning was that there was going to be a massive liquidation to raise capital for problems that are in Europe. Are you hearing any rumblings of that nature from the intelligence sources that you tap into?
No, I haven't heard that before, but there's always that possibility. I mean, you saw it even with John Paulson. He may have had a lot to do with gold dropping as low as it did in December, as he had to liquidate gold positions to come up with margin calls. So, there's always that possibility. One thing about my work, Michael, I'm never good at the catalyst. I never know why something happens. I just know that the charts tell us usually before it happens, and it's always a possibility.
Okay, so going with your track record of success on this show, do you have any targets at this point for the next low that you're looking at on the gold market?
Well, after you have a big move the way we have had from in the gold market, basically from the low of 1523 to where we are today, you have to look at a pullback, a sell-off down to 1600. You're going to get a significant bounce, and it will have to work its way lower. I honestly would like to see it go lower personally because I want to buy more. I'm not looking to throw my towel in the gold market. I have not sold a single ounce of gold or silver bullion, and I've been accumulating this stuff since late 2003 and early 2004. So I'd love to see it go lower because I'm going to buy more. As long as we're on a fiat currency, there's no real reason to ever get out of gold completely. But as a trader's view, we have to look at the cycles, and the cycles, are still somewhat on the bearish side for a fair part of the 2012.
Okay, I can't leave that alone. You brought up the cycles on this. What do you have any time cycles going off for gold?
Well, I will tell your listeners this much. Coming up, I believe on. Let me just make sure I have all my stuff correct here. Coming up, I believe around February 26, February 27, 28. You get ready. I think gold could start to pull back around there.
Okay. Now that's the end of the rally is what you're thinking would occur about that time. I want to make sure I got that right.
I think there's a fair chance that gold, could start to see weakness there. It's been very, very strong. It's done more than I expected it to do, to be honest. Since late December. But again, gold and the stock market, the S&P 500, are somewhat synonymous. They usually trade together. They're not always. They're not exactly the same cycle, but this time around, like I already, warned your listeners, I said, around the end of this month, you got to start to be more conservative now. The easy money in this market is done, in my opinion, and I feel the same way about gold. You're going to have to really tighten the belt buckle and be cautious, because we could be in for some declines. Okay. So, but we still have a few more days where gold could trade higher.
All right. So, and what about gold mining stocks? Are there any of them out there that you'd like to take profit on as you go into this?
All of them. Take profit on all of them right now. The GDX, which is the market vectors gold miners ETF, its upside target is probably 58 and a quarter. It's trading right now at 57.30. Take your profits. If you're in Newmont Mining, which one of the miners that I love, take your profits today. If you're in Rand Gold or Royal Gold, all of these things, start to take your profits.
God, I'm glad I asked you.
Yeah.
All right, one more time before we go out. Tell everybody how to get a hold of you, what they get when they do get a hold of you, and your upcoming events.
Okay, well, come over to InTheMoneyStocks.com. Take a 7-day free trial, either in our intraday chat room, or if you're a swing trader or an investor, come over and try out our research center. You'll get all of our nightly videos, all of our trade setups. You'll also get all of our hot charts and alert posts that we put up each and every night. There's just tons of content in there. Also, this Saturday, we're going to host an In the Money Stocks methodology webinar. It's probably going to run about 7 to 8 hours. It's a stock market boot camp. We'll cover everything. Our methodology works on Forex, works on futures. It works on stocks, indexes. It makes no difference. It's all the same stuff. We'll learn about our cycles, our proprietary time counts that we use each and every day in day trading, and also on swing trading. And come by, Michael. That's all I could tell them. Give it a shot.
That's it. You'll be very happy you stopped in. Nick, thanks for showing up again.
Thank you very much for having me, Michael. Have a great day.
You too. All right, my pleasure. Everybody, that was Nick Santiago, President and CEO of InTheMoneyStocks.com. You will be very happy you met this gentleman. Go on, try out his technology. You're going to love it. Upcoming